let me introduce our dear friend. He's a passionate entrepreneur with a diverse range of skills that have allowed him to excel in various roles in the hospitality industry. And after completing his education at the Ohio State University, he entered the hotel industry and quickly made a name for himself as a developer and investor. He built ground up, acquired, and managed hotels with absolute baller success. And along with his expertise in the hotel operations, he also possesses the ability, big one here, to raise capital and has utilized his financial acumen to secure funding for his projects. That's always huge, guys. That's the bread and butter. Now, in addition to his involvement in the hospitality industry, he's also extended his expertise to the startup world, serving as an advisor on the advisory board of a few promising ventures. Eager to hear about that. And his ability also to identify emerging trends, opportunities, monetization strategies, and capital raising has made him a sought-after investor, and his insights have been appreciated, obviously, by the startups and will also be appreciated by us tonight.
That's right.
Overall, I must say, his passion for entrepreneurship and his ability to navigate different industries with ease have made him a well-respected entrepreneur within this community, in the entrepreneurial community, and his commitment to excellence and his drive to succeed have set him apart, really as a leader in this field. He's got, I think, 15 plus hotels, right? Marriott, Hilton, Best Western. I mean, it doesn't stop, guys. When we heard the story the first time, we're like, what the frick? So, guys, without further ado, I'm super pumped to introduce to the Multifamily Freedom Chasers community, Sujay Mehta. Brother.
Yo, what's up, man? I gotta be honest. This is one of the coolest platforms that I've been able to speak at. Not just because you guys are so cool, but just the way that this whole thing has gone in the last 30 minutes. I mean, people are sharing their wins for the week. It's so positive, and it's more than just like, how do we make the most money, right? It's more than that. It's about life. And I'm so excited to be here with you guys.
Yes.
Thank you all so much for spending this time with me as well. So
absolutely, bro.
Go.
Sujay, man, when are we gonna see you in person next, bro? It's just always great to see you, man. But of course, in person can't be replaced, man. Any chance we're gonna cross paths in person in the near future?
So we're so close. So you guys are coming. I saw the Funrise thing come up. So that's 10 through 12. I think Vina, me, a couple other guys were speaking at Teach Week in Miami just a couple days after that. So if you guys are going to be there for a couple days, would love to, meet up even maybe Sunday evening or something if you guys are there till then. So that would be awesome. We could meet up.
All right, brother. Let's be in touch about that, man. Let's go.
Absolutely.
Yeah,
Sujay, man,
I would love to see you. Go for it, Trev.
Bro, it's just I'm stoked to have you on tonight, man. Because of course we've had a chance to know each other a little bit. We'll get to know each other a little bit more tonight. But it's just going to be fantastic that now the Freedom Chasers are going to get to know a little bit more about Sujay, who you are. I think your story is fascinating, man. I'd like to really start there if we can start unpacking it. Now, maybe if you give us like the quick version up to college, okay, really quick up to college, camp out on where you were at college, and then I know something profound happened right after that, and I really want to dig in there, man. So if you could kind of start there, bro, and fire away, that would be amazing.
Yeah, I mean, so people always ask me what's my story, and I always struggle with that question a little bit because all of our stories are still being written, right? And it's by no means have I gotten to where I want to be, not just like career monetarily, but when I look back and I think of the life that I lived, Marcel talked a little bit about purpose, right? So I haven't achieved my purpose, or I don't feel like I've gotten there yet. And so, the story is yet to be written, yet to be finished. But so far, until college, I came from a family that moved from India, Indian, obviously, And so my parents moved from India as immigrants, and they had nothing. They had absolutely nothing. And real estate, over time, real estate was kind of their way out. It was their way, their access to the American dream. It was their way to create something from nothing. And it was that platform. And so that's why I love real estate, because, there's no prejudice in real estate. There's no, prerequisites. I mean, you go all in. I mean, you can do it, right? Anyone can do it. And that's the beautiful thing about real estate. My parents did it, right? So
yeah, dude, your parents were freedom chasers, bro.
They're freedom chasers.
They're freedom chasers, man. Exactly.
So, but with that being said, they struggled a lot. I mean, they worked hard. My dad was a newspaper boy at the age of 30, trying to support a family. 9 people lived in a studio apartment in New York. It was tough. And they wanted me to have, stability, a regular W-2 income, job security. They wanted me to be a doctor. And so, the pressure of, parents and, Sujay, you got to be a doctor, you got to be a doctor. And I didn't hate the idea, right? So, I wanted to be a doctor my whole life. Wow, went to the Ohio State University.
Wow, you got to throw, you have to throw that in there, right? I respect the fact. I respect the fact that you emphasize it.
When I was reading that, right? I mean, speaking about it, I was in my mind for 1 second. I said, do you say the, or do you just say Ohio State?
It's the official name. It's the Ohio State University. So Trevor hates hearing it as a Longhorn. So, we always do this, but
yeah, I respect that, bro. I respect that, because I do the same thing, man.
No worries, man. No worries. But yeah, and then, that takes us right up to college. So, my whole life, I've been told that I'm going to be a doctor, went to Ohio State as a neuroscience major, always struggled with the idea. I knew I wanted to be an entrepreneur, deep at heart, and, always have those debates at home, like, Dad, why won't you want me to become an entrepreneur? So we always went back and forth a little bit, but at the end of the day, I stuck to the science field, neuroscience major, graduated at Ohio State as a neuroscience major. So, that takes us right up to college. And then, as you alluded to, after college, the path of medicine to become a physician, it's a marathon. My wife, she's an anesthesiologist. She's about to be 30. She's still doing her thing. She's still a resident. She still has one more year, or I guess one more month, and then one more year of fellowship until she can finally start working, right? So 31, right? And at this point, I'm 21, 22, graduating college, and I'm thinking, okay, I still have another 10 years till I can start working, right? It's ridiculous.
Yep.
And so I thought, why don't I take a couple years off, and take 2 years and do a philosophy program. It was a life-oriented education program that was based in India. And it was something throughout college I was, always debated, and it was something that I really wanted to do. So, I studied in this very, very traditional style of education in India. We didn't have technology. We didn't have, we didn't have washers. We washed our clothes with hands like you would see in like a movie. We ate very simply. We sat on the floor cross-legged, right? And that's kind of how I lived, very simply. But the beautiful thing about that is when you're content with luxury, you can't think. You don't, you think differently. You don't push yourself. You're not disturbed. But when I was there, when it's 105 degrees in India and we don't have AC, we don't even have we have fans in our rooms, but the fans aren't great. They're not the fans that we have here. And so you're sweating, you're hot, you're disturbed. And that's when you can really dig inside and find that, purpose that you have, that whatever you want to achieve in life, whatever it is you're thinking about, you start thinking, you snap out of your everyday mundane life where it's, Monday, you wake up in the morning, you start your day, and it's, first thing we open our phone and, the world is telling us how to live, how to think, how to dress,
That's right.
What we have to do. And so it was a beautiful experience for me, 2 years, and it was a spiritual experience as well. And so, that was amazing. So then when I came out of that,
Hold on, Sujay.
Go ahead.
We got to press the pause button, man. There's 2 things I'm curious about with this part of your story.
Hit it.
Nope. Number one, how did your family react? Because I did a 2-year postgraduate kind of Christian leadership service program. After I finished grad school, man, I put my career on pause, and I got quite a backlash, from people that were close to me, even some professionals in the space. They didn't support that, man, 1000%, and they were very upfront and vocal about it. So first thing, I want to hear how your family reacted to that decision. And then also I want to understand, why in the world would somebody do that? Why would they do that? Go through such it sounds like a challenging program in every aspect, spiritually, mentally, physically. Why would somebody go through that and make that decision in 2 years at that, right? So if you could speak to those two things, that would be fantastic.
Yeah, absolutely. So my parents and my family, they were so supportive. I mean, I can't be grateful enough. They were, they wanted me to do something like that. And it comes back to like values, right? So I really valued that life-oriented education, and it's how I was raised. And the guy who started the school has been someone who's been an inspiration, for me and my family our whole life. And so the values that I was raised with, I think my parents had those values as well, instilled those within me and my education at home, away from school and that kind of stuff. So, my parents were really the ones who I think created that passion for this type of education inside of me. And so they were fully supportive. They were a little bit nervous on the career side, because they knew I was already on the fence a little bit, and they wanted me to become a physician, obviously. But outside of that, they supported my decision 100%. And my dad's been a guy who's like, whatever you put your mind to, you better go get it, right? So he said, if you want to do this, you go all in, you do it 100%. And when you come back, don't worry about anything else. When you come back, we'll figure it out. So even while I was in India, I told my dad that, hey, I'm thinking about not doing medicine and this and that. And they were supportive. I mean, obviously there were some debates and conversations, but it was all constructive. It was all, and the other thing is, like, when you have parents that literally gave up everything, like they left India, they left their family, they left their home, all thinking about like my sister and I and our success and our happiness and us, they felt like our life in America, our education, the access, the opportunities that we would have are so amazing. And they literally gave up everything for that. And so, when you have two people that support you like that, I mean, that's all you need, and that's what, even this, like what you guys have here is like, I'm blessed. I know I'm blessed, and not everybody is that blessed to have something like that. But even platforms like this that we have now, this is the beauty of it. It's not even, like the knowledge and all that kind of stuff is great. And you guys mentioned there's so many masterminds available now. You pay a little bit of money and you'll have access to all of that knowledge. I mean, this right here, right? This has all the knowledge of the world in it. But the real value of what we are doing here is the support. And you guys said, like, what are the wins of the week, right? That's the support system. That's the network. That's the true value of what you guys have created here. So yeah, my parents were supportive. I did have some uncles and aunties who were like, like, what are you doing? What are you thinking? Like,
For sure.
Technically, if you make, whatever, 300, 400,000 as a doctor, technically 2 years back is you're paying 800,000 for this. Like, how does that make any sense? And, opportunity cost and all those things. And, some people get it, some people don't get it. But I think the way the world is moving now, I think there's like true value in this type of education. And I think people are starting to realize more and more. And there's people all around the world that, like, just like you said, Trevor, I mean, you took 2 years away to, I mean, that wasn't going to get you, a better job or something like that, but it was going to make you a better person. It's going to make you a better human. And I truly believe that those soft skills, I mean, those translate. You might not be able to see it right away, but those translate into something. So, it's, yeah, I think it's
for sure.
It's a great point you bring up there, Sujay, because, once you get exposed to this, like, oh man, I've been working a job for a long time. Like, now you get exposed to all this, what else one can do. There's one big thing, that one shouldn't think all negative about that. And that is that your past, your journey has brought you to where you are, right? So I can tell for myself, for example, the 7 years I had in the corporate world right now, I wouldn't want to skip them. If I had jumped into real estate, at 22, without the experience I had made in the corporate world, I mean, I think I wouldn't be equipped, to be honest with you. I'm very grateful actually for that past, because it made me who I am today, and it gave me a skill set that I wouldn't have acquired probably that quickly within that time. But it's a different kind of skill set. Like you said, it's a soft skills. It turns you also into somewhat of a person. Now, it comes with some other negative habits, with that feeling of security, and when you're an entrepreneur, you don't have that consistent paycheck, right? And somebody that's always been an entrepreneur is used to that, versus somebody that has that consistent paycheck, is mentally in a completely different state. But I wouldn't, and I love it how you say that, I wouldn't want to miss that, and call that wasted time, so to speak, because a lot of people, they get so negative, I wasted my time. Not necessarily, right? Look at the good side. No bad days. Talked about that last week, right? Only good ones. Look at the positive.
100%, bro. 100%. Sujay, I'm going to ask you to unmute here, man. There you go.
Oh, there we go. There we go. Yeah, while he was talking, I muted myself.
Because like I call BS on that, man. He's like, I'm just not
No, I think what you said is absolutely right. And even no matter what our past is, it's so important to reflect. And that's something else that I talk about a lot with even like some of our, like my students that I have who are trying to get into the hotel space. Reflecting and introspecting is so important, because it will allow you to figure out, like, okay, so I did A, B, and C, and that got me to D, right? What can I have changed? What can I do differently? Because as we all know, like, everyone's referring to the 2008 financial crisis and trying to compare it to now. History repeats itself all the time, and it could look a little bit different. There could be one or two variables that are different, but it's so important to introspect. And when you introspect about something other than business, even, it's a skill. It's a way of thinking. It's a perspective. It's a philosophy. And when you're able to do a comparative study, all of a sudden you do it in life, for other things, for, should I have bought this, or should I have bought this? Should we have gone here on vacation versus here on vacation? Now, all of a sudden, you're comparing a Class A asset and a Class B asset. Your mind knows how to compare. Your mind knows how to think. Your mind knows how to, find the differences between the two and analyze them and see how it's going to affect your life. So these are like the soft skills that you get. And, no one can tell you that it's going to make you X amount of more dollars, or it's going to increase your NOI by this much. But it's something that, like, it's undeniably so important to our success as a person, as in our career life, as a father, brother, son, daughter, wife, whatever it may be, right? So
100%, bro. 100%.
Hey, Trevor, unless you have another question that touches on that, in light of time, I would love for Sujay to touch.
That's always the thing, man. In light of time, always, every time, brother.
We can go for 2 hours, man. Easy, then we make the 4-hour Zooms here.
That's right. When we launch our podcast down the road, man, we're full-time professionals. We'll just run it back, man.
That's what we're gonna do. But I want Sujay, let's talk a bit about hotels, because that's what people don't hear about often. There isn't this like big, like, hey, here's this hotel mentorship or this hotel YouTube channel. How to buy a Marriott? Like, what? You can buy a Marriott? I thought this is just some corporate stuff, right? And I'd love for you to start talking about hotel. And I think it was your first deal, I believe, right? The Best Western, right?
Infamous.
Talk about how you got into that deal, right? What did it take, and also the challenges that you encountered, and how you went creatively past that, right? Because there was numerous times, like you said, where you could have called it quits, right? And say, oh, okay, I can't do it, kind of a deal.
Yeah, I think the first thing, and you talked about it a little bit about, the corporate and the security and all of that, is one thing that, when I started my career, once I decided that I wanted to go into real estate, and again, my family had experience in real estate. And so naturally I went to my dad and I said, hey, like, this is what I'm thinking. And he said, great. What are you going to do? Where are you going to start? like where are you going to get the money from? And that was the first time I was like, say what, like, oh, thought we're all family here, like what's going on, right? But that lit a fire under my butt, and he never let me get a job, like a corporate W-2 job, for that reason. And I was, not to toot my own horn, but like, even though I graduated neuroscience, I was smart. Like I could have found a job that was, allowed me to live life, allowed me to go on vacation with my buddies, things like that. But he never let me do that. And I struggled, and I had to push myself and find ways to get creative. And so when my first deal came on the table, it was a Best Western, and it was, this guy tried to sell it. And I went to go buy it, and we were negotiating, and then we were $50,000 off. Okay. And it's
Sujay, before you say that, one note. Where
Yep.
did you find it, for everybody to understand?
Yeah.
Where do you look for hotels?
Yeah. So if you go to Google, you search hotels for sale, you're going to get LoopNet, CBRE, Marks and Spencer. It's
Same stuff.
It's you can get them anywhere, but this one specifically was, it was network. So, I called a few people who owned hotels. I asked them, hey, you guys have anything for sale? Went around. A few months later, somebody connected me to somebody else who was selling their property, and it wasn't listed. And so it was about $4.5 million. And so we all know, when you're trying to buy any type of real estate, you're trying to do, 20 to 30% down. It could fall somewhere in between that, depending on what kind of financing you're trying to get. So at, $4.5 million, we're looking at about roughly $1.1 million down. And, $4.5 million, I was 50,000 off, between what the asking was and what I was offering, 50,000. And I let the deal die. I didn't go for it. Couple years later, that deal came back on the table, and this time it was listed on Marcus Millchap. And I saw it, and I called him up, and I said, hey, you're still trying to sell this thing? He's like, I am, but the revenue's gone up, the price has gone up. Now it's, almost $300,000 more just 2 years later than what I tried to buy it at. And so it was 4.65, I think, is how much it was at that time. And I put, and I needed 1.1 down. And he told me, he's like, hey, like, I have another buyer. I'm about to sign the contract. Tell me now and wire me 50K non-refundable. That's the only way we're going to do this. So I gave him 50K, and I'm like, shoot, well, now I got to find the rest of it. Right. And so I had to raise capital. And this one, I actually got a private hard money loan for 1.1. And over 2.5 years, I was able to pay that back. And we're making about like 85% ROI on that property now, every single year.
Hold on. 85% ROI.
Yeah.
Can you put that in like dollar perspective?
Yeah. 850,000. Yeah. Off of one property. And it was a hard money loan. 100% of the loan was raised like that. So, the beautiful thing with that was no partners, no investors, right? So as soon as I'm able to pay that money back, it's all mine. I don't have any investors. There's no pref returns. There's nothing that's coming out of that. And that now is like my baby that, allows me to do everything else that I want to do in life, right? So if I want to take a risk, it's okay, because I got the Best Western in my back pocket, so we'll be all right. So, but anyway, like I'm obviously cutting the story down, a lot because of time a little bit, but the thing about it is, you have to get creative, and when there's a fire lit under your butt and you have to make a deal, like I was getting married, like I didn't know what I was going to do. Like, how am I going to support, my wife? Like, I don't want to get married and be like, yo, can I borrow some money? Like, no,
Sure.
I needed a deal. I needed a deal now. And I had to go find the money. And so I found someone who was, willing to come in. I got a hard money loan, and I think we have like a little bit left because of COVID. We got some time and things like that. So, but we could finish out the loan anytime. Now, and the value of the property has already gone up to $7 million. So, we're in great shape, over there. So, and the other thing about it is like, Marcel, you mentioned, buying a hotel, right? Nobody realizes that this asset class exists. You drive down the road. I mean, all of us here have probably stayed at a hotel at some point in their life. And, when there's something wrong, you think like, oh, I'm going to call Hilton or I'm going to call Marriott, it's corporate, I want a refund. Why won't they give me a refund? It's Hilton, such a big corporation. But, all of these properties, most of them are franchised. So what does that mean? So franchise, that basically means that we own the brick and mortar, we own the real estate, we own the land, and we own the operation as well. So the employees are my employees. The processes, procedures, most of them are our processes, our procedures. Can you give a refund? Can you give a discount? Do you give extra cookies at check-in? Like things like that. A lot of that stuff is our our decision. We own those decisions, we own those processes. But Marriott or Hilton or Hyatt, whoever it may be, they own the name. So we're doing business as like a Hampton Inn, Columbus, Ohio, or Hampton Inn, Cincinnati, Ohio, whatever it may be. And so what we do every month based on the total revenue, we give 15% or 12%, whatever our contract is, back to Hilton as a royalty fee. And that's kind of how we work with these franchises. So that's kind of how the hotel industry works. You can franchise a hotel, you own the real estate. It's an excellent asset class. The beautiful thing about it is the cash flow. There's so much cash flow every single day because it's a business. You're selling your rooms every single night versus multifamily. You're doing it every single month, or your yearly leases versus daily, nightly leases. So there's a lot of cash flow. There's a little bit more of a risk that's associated with it because it's a business. Because now you have so many more expenses. If you don't pay attention to them and you let those slip, all of a sudden, those could eat into your profit and then some, right? So a little bit more risk. It's not as passive, quote unquote, as multifamily, but there's pros and cons. The cash flow, could be a lot higher on a daily basis. You don't necessarily have to exit, the asset in 5 years to really recoup a lot of those returns. When I buy an asset, I keep them for 10 years. That's how I underwrite it. I underwrite it for 10 years. Now, if another deal comes 5 years down the line, we'll get out. If I've raised a lot of capital, investors, a lot of times they look for 5-year exits. I'll refinance them and I'll cash them out in 5 years. There's so many ways you can do it, but I look at hotels as a long-term portfolio deal because of the cash flow. It's amazing. So.
And Trev, before I turn it over to you, because I know you have a few burning questions yourself, but I can't help it right now. And I know Sujay has been part, and again, in light of time, right? Sujay has been part of a bunch of hotel versus multifamily standoffs. Right? So Sujay, I'm going to ask you to be on a very ethical level right now,
Yeah, I got you.
And you touched a little bit on it. Give us your one side, what's better about hotels versus multifamily, your number one thing. And then also on the flip side, where people were battling you and you couldn't win the battle, what's better, the number one thing on the multifamily side versus the hotels?
Yeah, absolutely. So number one thing about hotels, and I've kind of, well, actually there's two. And one is a little bit more, lighthearted a little bit. So the first one I'll start with is the cash flow. Like I said, there's so much cash flow in hotels, and it's every day, right? I'm seeing that cash flow every single day, especially in like the Midwest market is where we're heavily invested in right now. When summer hits, so like right now I'm getting excited because the next 6 months are going to be great. So, kids are off from school, people are traveling, people are vacationing, visiting. We're really cranking in these like next 6 months. We're going to see so much, cash flow. We're going to be able to be distributing to our investors. We can recapitalize our assets. And then the other thing is when we have our loans, usually they're P&I. So similar to what you would have on your house, right? So your home, you're paying your mortgage every single month and you're paying principal and interest. And so over time, over 20 years span, you own that asset outright. And it's a beautiful thing versus, what I see a lot in a strategy for multifamily right now, especially because so many people are trying to get into it, is it's a lot of value add. And that's what you're always trying to find. You're trying to find value add, 5-year interest only, then refinance. But in 5 years, anything can happen, and that's what's happening right now. And that's why all of you guys who are getting in now is going to be awesome, because there's going to be a fire sale. People are struggling. Even the most, like, smart, experienced, those investors are even struggling right now, because of interest rates went up so fast, nobody expected it, right? So there's a little bit of that, security. You paid down your mortgage on the asset, plus there's cash flow. So that's a great thing about hotels. Number one thing that I love is the cash flow. Number two thing is the employee discounts. And so it's awesome. I go stay at a Hilton resort anywhere in the country. Like, I just came back from Spain actually this morning. We stayed at a great Marriott right in the heart of the city, and it was maybe like 20% of what everyone else would pay. So it was awesome. Like, $50, $100, I could be staying at, the nicest properties all around the world. So, but again, that's a little bit lighthearted. You don't get into hotels just for that, but it's definitely a nice little perk. For multifamily, I will say that the best thing is the passive income. It's really, to be honest, it's a little bit more of a passive real estate investment. You get a third-party management company, which is totally normal. And they can manage your day-to-day business, your operation, and you see that cash flow. And again, 5 years down the line, typically the value is going to increase. I think Vina was on here, I don't know how long ago, but Vina always, anytime you talk to her about like, why is multifamily good, the number one thing she'll say is it has the number one, like Sharp ratio, whatever rating. And, that's the one thing that she's always talking about, but she's right. Like, the risk adjusted return in multifamily is absolutely amazing. And, to be honest, I am a multifamily investor. So, I do invest passively with people like Vina, and you guys are all the experts, right? Why am I trying to, raise capital for multifamily? I'll just invest it with you guys when you guys have a great deal. So I do invest in multifamily because, it's monthly income. It comes in every month. You have these leases that, it's contracted out every month. How much you're going to make on the first of the month. Whereas for hotels, we are adjusting rates every single day. We might have a really rough month, and then the next month we might have a 2x month, right? So there's a little bit more of that security and consistency with multifamily. So again, the other thing I will say is, like, when you compare two different asset classes, and there's so many more, right? There's self-storage units, there's industrial, there's office space, there's all these things. And we should know all of them. We should know what all of them offer, what the pros and cons are. So that way, when a good deal falls on our lap, we're able to recognize it. And, Victor, when he's underwriting, 50 deals a month or 50 deals a day, and
there we go.
He might say no to every single one.
New KPI, Victor. New KPI.
No, but like when he's underwriting 50 deals a day, he might not find a single deal throughout the week, but in week 2, when there's one deal that comes and he's like, whoa, this is different, he's able to recognize it and jump on it because he knows what he's been seeing, for the last week, right? And so similarly, when we're looking at all these other asset classes, we're able to recognize even within our own asset classes, like, this is a really good deal because across every sector, we're not seeing these kinds of returns. So
That's right.
Fantastic,
Amazing.
Bro. Fantastic.
I think you did really well, Sujay, without being subjective. Is that the right word? You were very objective.
Biased, yeah.
Biased. That's the right word. Biased.
That's right. You navigated that question very prudently, man, and very savvy, of course. In Sujay style.
No, man, I'm trying to be honest, and I do love multifamily. I'm not gonna lie, I love multifamily. And the reason why we get along so well is, and one of the things I know we want to talk about here too is like comparing the two and trying to see like what we can use from either class to help us respectively in our own fields, right?
Absolutely.
And so, I spoke about like the expenses with hotels, right? Hotels have a list of expenses, right? We have breakfast that we give every single day to our guests. We have furniture. I mean, all of our units are furnished. Like, do you know how much of a pain in the butt that is and how expensive it gets? But we have all of these things. We have breakfast, our utilities. We pay for our utility costs, not our guests. You know, we pay for them. So our electricity, our gas bill, all of that stuff, right? Plus payroll. Our payroll is insane. So we have all the housekeepers, we have all the front desk people, we have a full-time GM, we have a maintenance guy. And then, after that, we have all these other repairs, and maintenance costs that might happen. Every so often I have to go in and do a deep cleaning of the AC or a deep cleaning of, the tiles, the grouting, all that stuff. That all takes manpower, it all takes labor, and it's hourly costs. But with that being said, when you have so many expenses, you're able to recognize ways and get creative to decrease those expenses. And so a lot of times what I've seen happens with multifamily investors is sometimes they're so excited about the deal and it's so passive that, asset management isn't really happening that much, right? You put everything on a third-party property management company, and we forget about these small things. And it seems like $1 or $2 here, but over time and over, 20 units, 50 units, 300 units, it really helps your bottom line, right? And so the beautiful thing about bottom line is it goes straight to your pocket. So $1 saved on your expenses goes straight to your pocket. $1 more on your top line or your revenue, it doesn't translate to $1 more in your pocket. And so that's the beautiful thing about, having a lot of expenses and being able to pay attention to them is you're able to like crank the screws and really tight and make it a well-oiled machine, which is why we were able to, when I bought the Best Western, it wasn't producing I didn't underwrite it for an 80% return, right? ROI. But we were able to come in and we were able to recognize, okay, this was managed by an absentee owner, right? And he had to have these additional expenses. They had to have XYZ assistants and these and this and this and that and whatever. But we were able to cut some of those corners and still have the same level of service, and kind of help that bottom line and create that NOI. So then when you flip it, you're able to actualize on that. So
what is an average expense ratio there, Sujay, in the whole
yeah, so typically we want to take home at least 35%.
That's not bad.
Yeah, it's actually great. So 65% is our expense.
Which is higher than multifamily, of course, but it's not like where you say like, wow, it's like 90% or something like that. But that is obviously due to your high cash flow, right? A lot of cash coming in, but therefore a lot going out too. Cool.
Yeah, typically, so when we look at a deal, so let's say there's a $10 million property for sale. When I'm looking at a $10 million property and assuming that it's a class A, not asset, but class A flag or franchise, so like a Hilton or Marriott or, even Holiday Inn could be, close depending on how old it is and stuff. But if we have like one of those Hilton, Marriott kind of franchises, if they're selling it for $10 million, typically I'm looking for like a $2.5 to a $3 million revenue is what I'm looking at. And then obviously there's other factors that go into it, location, how long the franchise license is, that kind of stuff. But yeah, so typically that's kind of the range that you'll get. It will be about a $2.5 to $3 million revenue. And then, our expense is going to be about 65% of that.
Let's go.
And then another quick question comparing hotels and multifamily. What kind of cap rates are you looking at from hotels compared to multifamily?
Yeah, no, great question. So that's the other thing. Because of our high cash flow, the cap rate that we're looking at is about 8 to 10% on hotels. And a little bit of that depends on the franchise, how long is it going to be in the system? How long can we underwrite for? And that is taking out the principal. So when you're underwriting a deal, I don't consider the principal as income. Whereas on a bank statement or, officially you are supposed to do it, but that's how we stay conservative. So typically I'm looking for 8 and 10%, free cash flow, and then an 8-9% cap rate is what I'm looking at. So versus multifamily, it's a lot different. So even in a distressed market, you're looking at 5.5% cap rate. So
At least
That's
from
right.
from the seller's side, right?
yeah, for sure.
That's true.
And this is amazing.
And that's the thing right now, like there's so many similarities. Real estate's real estate. So right now we're having the same issues. Sellers want top dollar. Buyers are like, dude, like, we're about to hit a recession. What do you guys, our rates are 7-8% right now. How you can't ask for the same price as you were last year. But, ironically, I might be selling a property right now and I'm doing the same thing. I'm asking for an arm and a leg when, when I'm going out and I'm actively buying other properties, I'm trying to convince them that it doesn't make sense right now. So, it's just, we're in this really big gray period right now. And I think the next like 2 months is going to bring a lot of clarity to the space in general.
Agreed. Man, I feel like, Trevor, there's so much to talk about. Maybe if Sujay is up for it, we should do one of those specialty Zooms for an hour. We just talk like legitimate hotel 101.
I think that's a great idea, man.
Yeah, for sure. I would love to. I'd love to. Any additional time with you guys is always something that I'm down for. So
come on, bro. Come on. Yes. Feeling is mutual. We're gonna open it up, Sujay, for questions really quickly.
Yeah.
I want to throw something out there. This is I'm just taking a shot in the dark here with this one.
Yo.
But with your savviness in the entrepreneurial space, I want to hear your perspective on, okay, let's say somebody wants to put real estate aside. Okay, maybe we don't, but I think put real estate aside. All right. Is there something that, that somebody's looking for, an extra stream of revenue that's a low barrier to entry that, and maybe this is a pipe dream, man, but that's why I say it's a shot in the dark, low barrier to entry, just to add a little bit of cash flow to just help them either, number one, give them that extra push over the hump for them to, move into another space or whatever, right? Or give them that extra flexibility. Is there something out there that you've come across that you know of that, like, hey, if you need an extra a few $100s a month or extra $1,000 or $2,000 a month, man, do this to help contribute to your cash flow, and maybe give you some flexibility and make a pivot sooner rather than later into either full-time real estate or whatever they might be going into? First of all, did that question make sense?
Yeah, no, it made complete sense. And right now it's so crazy because there's so many opportunities, and even taking consideration like Turo, Airbnb, even your own car, you can go out and Turo it and make a little bit of extra money on the side, right? And so something that I always tell people is like multifamily, it's tough when it's your first entry into real estate. Like typically if you have some experience, when you have, maybe like a residential home, one residential home, then you kind of get an idea of like what it means to have a lease, what it means to rent out, like what it means to have a number, numbers coming in. Like my wife, for example, she's been in the medical industry her whole life. She's essentially a student, and it's tough for her mind to think, investment, when I say we're investing in a deal, she's like, we just lost this money. Like, where did it go? It's on my bank account. We just lost it. I'm like, you don't understand, we didn't lose it. We're investing, right? And so anyway, people aren't necessarily wired to think like that. And that's what you guys are doing, right? You guys are learning together and creating that Monday, Tuesday, Wednesday, with all your calls and resources. You guys are kind of substituting for that. But, even for hotels, as residential portfolio is to multifamily, short-term rental or Airbnb is to hotels, right? So I always say, like, one of the easiest things is go grab an apartment, arbitrage it, go lease it. You might not have a ton of money even to invest, but go arbitrage it and put it on Airbnb, give it to a management company, let them manage it if you want it to be completely passive. The other thing is, if you want, like, let's say you have a little bit of cash just sitting there, not doing anything. Even me, for the first time in my life, I opened up CDs. They're offering 5.5% on CDs. JP Morgan Chase is offering fully liquid CDs at 4.2 or something like that %. So, I mean, even that is great. Your pref return on a lot of multifamily syndications is 6%. Plus there's a risk there. Right now, if you can lock it up for a month or 2 months or 3 months until you get a deal, why not do that, right? So there's so many opportunities right now to do things like that. With that being said, hotels are awesome because of the high cash flow and you could syndicate them. So hotel syndications is another one. But you said hotels aside, so I won't say that, but yeah, I mean, there's a lot of opportunities like that exist, depending on the risk. If you are open to a little bit more risk, I think the Airbnb route is great. Lesser of an investment would be a Turo kind of model, right now with rental cars being so expensive in hot markets. So
That's excellent, brother. I appreciate that, man. Marcel, should we open
Absolutely.
it up?
I think so, man. I see Piyush already has a question. Peter is raising his hand. I would encourage everybody that does have a hand, does have a question, to raise your hand now to get in line, because we're usually pretty strict about our cutoff time. We might go over a little bit longer if Sujay lets us.
I'm okay with it.
But with that being
first of all, Marcel, hold on. We got to get some fires in the chat for our boy Sujay. The man just got back from Spain. Okay, got off the plane and jumped on a Zoom on a Sunday evening with the Freedom Chasers. So can we just show some love to Sujay for number one, just the value that he's dropping, and number two, I mean, obviously, traveling halfway across the world and then jump on with us. Man, we appreciate you, Sujay. Thank you, man.
I love it, guys. Thank you. I love all these fire emojis. I love it.
Yes,
and
bro.
also to hear something new,
deserved.
right? Hear something new, right? It's interesting to see the perspective from a different asset class.
I do see some questions in the chat as well.
I would say the following. I saw Olga put a question in the chat. I will reward Olga with her question, because I know Olga is regularly showing up. So we won't be mad at her for not raising her hand and showing her nice face to us and speaking to us in person. But I saw Piyush has been raising his hands for the past 15 minutes to be first in line here. So let's give him the chance to have his question asked first.
All right, thank you. Can you hear me?
Yes, sir.
Yep, we can.
Awesome. Hey, Sujay. Hey, you mentioned about syndication, so that's very interesting. Syndicating hotels, right? So I'm familiar with multifamily syndication, how they are structured. It's typically 70-30, 80-20. There are various fees involved. How is hotel syndication? Like, how does it work? What does the structure look like? A typical structure look like?
Great question. And so again, syndications are typically the GP or the sponsor can syndicate it however they want, right? So to be honest, when I syndicate my deals, I'm able to give a lot of return back to my investors. So typically what I'll do is I'll do an 80-20 structure, and I'll just keep it at that. That's it, 80-20 period, but every deal is a little bit differently. And then the other thing with hotels is because there's a large management portion or the asset management portion that's involved, we'll usually take some sort of management fee, or if I hire a third-party management company, they would take that fee. But my model is to also do management. And so I would take out my own management fee, and then the GP LP split would usually be about like 80-20, might be 25-75. And then depending on how the deal is, how long we're going to have it, if it is a value add, then there might be some sort of like disposition fee or an acquisition fee. We also build properties. So, when you do developments, you can also take a development fee. But every deal is usually structured a little bit differently, and it would typically be up to the sponsor to structure it however they want. One other thing is typically there aren't a lot of hotel syndications. It's something that's just it wasn't very popular in the industry. And so I think people are starting to move towards that now. But it used to be kind of like some people in the industry, you invest with them and you just become a straight partner with them. And then they would just take some fees. But now this whole syndication model is fairly new. So I think it's going to be really interesting to see in the next few years, what the standard becomes, quote unquote. But yeah, I wouldn't be surprised if it's typically, a 70-30 structure and plus minus 10% here or there, right? So probably pretty similar to multifamily, but good question.
Love it. All right, then let's go to actually Olga. Billionaire Pete, wait a second, I know he's a very patient man. Where was Olga's question? By the way, I meant to say kind face, not nice face. That sounded weird. I meant kind face. In German, it's the same word, so please forgive me. We always have at least one awkward moment on the Zoom where my German gets in the way. I can't find the question.
That's true, man. You never fail us in that regard, Marcel. We appreciate you for it.
I think Olga asked, what other distressed things did you run into to identify the best Western to be an opportunity besides it being an absentee owner, or if there was anything else. Here we go. May you please tell a little more about the distressed factors that you saw in the best Western besides an absentee owner when you were looking at it initially?
Yeah, so good question. But being an absentee owner is not a distress factor. It's everything, right? So when you're a distressed owner, that basically means that whoever the owner is, he or she are gonna have to kind of spend a little bit more money to be absentee, right? To have that completely passive sort of income. And so, there were additional breakfast expenses, for example. So they were, instead of finding, what is the optimal items that we can offer in our breakfast. And I'm starting to laugh because it's going to get really funny here in a second. But so basically what happened, this story, we went in, I went across breakfast. I went to every item and I looked at what they were offering. Right. And then, I pulled out my laptop. I looked at the pricing list from the vendors and we found out that we're buying the bagels for 50 cents more than what we could have if we just got them from Sam's Club, right? And so what we did was, we sell about 15,000 rooms a year at that property. Now 15,000 rooms, let's say there's average about 2.5 people staying per room or 2 people staying per room. You're talking 30,000 bagels. 30,000 bagels at 50 cents, that's 15K in your bottom line. Right. And so just bagels, freaking bagels, like changing where you buy the bagels from. We're not even changing the offering, but changing where you're buying the bagels from. Now it is a little bit of a pain in the butt to like find a new bagel vendor or whatever it may be and Google this and find this. But us as an operator taking that extra step to find it. And this is the other thing, that a third-party operator or third-party management company may not do that, especially when they're hitting budget. And so this wasn't a distressed property by any means. That was my value add. That was my upside, always, under promise, over deliver. And so this was my over deliver, right? I didn't know that all these things were going to happen, because in your due diligence time, you don't have access to every single thing. But when you go in and you give that tender love and care, you're able to find these kinds of opportunities to go above and beyond. Another one was, a lot of people don't know this, but even in your guys' multifamily, you guys should look into this, but you can wholesale energy, right? So there's energy wholesaling companies. And so what you can do is, instead of just like in Ohio, we have a company called AEP in Columbus, especially. They kind of have like the monopoly on our energy. Instead of going straight to AEP, you can go to another company and say, hey, here's how much electricity we use. And they will give you, they group a bunch of businesses together, and then they give you a group rate on your electricity. So that's what, when you're going in the store, you're at like a Big Lots or a Lowe's, and then someone gives you a little flyer and they're like, for 1 year, you can cut your energy cost by 3 cents. And then, and then if you don't renew that contract, all of a sudden it jumps up. If you guys have ever had that, and then they give you $100 gift card for signing up. But there's those energy brokers, even for your business. So there's so many opportunities like this, and I can go on forever. But that's the only way you can take 400K of NOI to 800K of NOI. It doesn't just come in one swing. It comes when you have 50 different things like this.
You're a creative problem solver.
Yeah, exactly. I mean, exactly. So and we all are, right? Like that's why we're sitting here right now. So
exactly, amazing. All right, let's go to the last question then for tonight, Mr. Peter Sentmark.
What's going on, guys? Sujay,
Say hey, Peter.
really appreciate you being here. You know, that you agreed to stay till midnight Pacific time is just incredible. We appreciate you doing that.
It's the opposite way, Peter, with the time zones, but it's fine.
No, we got 6 more hours, man. That's what he said, right?
You're back in Houston, right, Sujay?
I'm back in Houston, so Central Time, 8:30.
Oh shoot, you got all kinds of time then. I'm on the East Coast.
I got
man.
time. I got time. I can
That's
go
what
all
I'm
day.
talking about. So, hey, no, seriously, appreciate you being here. I mean, I'm blown away every week by what these guys, the guests that they bring in. It's absolutely incredible. They get better every single week. I don't even know where to start with you, Sujay. You've got my mind just totally spinning, but you're a real estate guy. When you said CDs, I'm like, what the heck is he doing? And I get it, right? They're paying a decent return, relatively speaking, at this point. But why would you not look for, like, I've been a private money broker for 30 years, right? We put people into deals for obviously more than CD rates, and we're at 65%, maybe 70% LTV. Why wouldn't you invest in those rather than CDs?
Yeah, so when you do private money, my money's not liquid. So right now, like for example, and you know, if you guys are trying to, buy properties, you know what's kind of happening in the environment, especially the capital markets. To be honest, I don't even think we've seen the real effect of what's happening in the capital markets until another 3 to 6 months. And so, I'm getting ready to acquire, 3 more properties this year, hopefully. And so I want to keep as much money as I can liquid, not tied up. Even if I invest with somebody, they tell me they're going to give it back to me in 3 months, 6 months. I don't care if it's a hard money. I don't care what my interest is, but my opportunity loss is going to be way more if I'm not able to get that capital back and invest it into my next project. And so, for example, one thing that JP Morgan Chase, they just launched it in February, is, and the reason I say JP Morgan is I don't care about the last percentage. It's just more than what it is in my savings account, right? So JP Morgan, they can get away with offering just 4%, whereas regional banks will offer 4.5 or 5.5 or even 6% return on your CDs right now. But I don't care for the last percent because I'm only keeping it there for 3 months. Or 90 days, 60 days. And JP Morgan just brought out a new product that's completely liquid. It's completely liquid. As long as I shoot them an email, it comes back to your savings account within the day. And so that's what I did. So I put it in there, it's completely liquid. I'm underwriting deals every single day. If I find a deal next week, boom, it's out of that account and it's into real estate. So that's the plan. So
awesome. So this is a product you can get out with no fee.
No fees. And even CDs, the beautiful thing about the CDs is at the end of the day, you're not going to lose your principal, right? So if you're saving it for a deal, it doesn't hurt you. Even in the stock market, you get 7%. So it's going to be more than your CDs, but you can't necessarily pull it out at the same value whenever you want, right? So, so that's how we think. And because I'm a real estate guy, I'm doing that versus other things. Now, if this was maybe another year where I don't think there's going to be a huge, like fire sale that's coming or, a lot of distressed assets that I'm going to be looking to jump into, then I might do some diversified investments. And I do some stuff in like the startup or venture capital or even multifamily. I do those things on a regular year, but, not this quarter. This quarter, I'm trying to buckle up. So,
well, as a real estate guy at 65% LTV, to me, CDs never make sense. But for the immediate access to your money, no fees, that I get it. That makes sense.
Oh yeah, and it's a short-term thing. It's not.
Of course,
I would never recommend it as a long-term investment. But just for the next 60 days until you get a deal done, it's all right.
Again, thanks for being here. We really appreciate it. Look forward to talking to you.
Hey, I appreciate you, man. Appreciate you.
Thank you, Peter. That's a great point, actually, these CDs, because there's another thing to it, Sujay. Yeah, you get some returns, but guess what? You're also not going to spend the money on some other crap,
It's a good
I mean,
point.
I tell you, when the money, I always want to be cash strapped. Always. I don't want to have money because the money goes somewhere. Trust me, it will, right?
Yeah.
Now, if you have a couple millions in the bank, might be a little bit different, right? But if you're just starting out, and you have a couple, 10, 20, 30, 40, 50, 60, whatever, 100 grand in there, it will chip away on crap,
Yeah.
So I always like to get rid of it.
That's my motto too, man. As soon as you get a little bit, you go put it somewhere. Go dish it out.
Exactly.
So
Amazing.
no, that's awesome.
Trevor, what an amazing night again.
For sure. I mean, we knew that was going to be the case, though, right? With Sujay coming on. But yeah, another amazing activation Zoom, 100%.
So we will make sure everybody, of course, this is going to go on YouTube. It will be live, I'm sure, as soon as tomorrow. Sujay, thank you so much for joining. And it's always great to connecting with you. You have that feeling where you just leave happy. When we speak with you, we leave the room happy. No matter the business stuff, I don't know what it is, man, but leave happy.
That's right,
No,
man. You're an uplifting person, brother. We really appreciate that.
I feel the same way about you guys, man. It's absolutely amazing talking to you guys every time. And the cool thing is your whole community is that as well, right? So you guys have really created something. I'm so blessed to know you all and be connected with you guys. And I'm sure there's other questions that come up. Feel free to reach out to me anytime with any questions. I would love to answer them. I'm sorry I took a little bit of time, additional time in the beginning, and we didn't get too deep into the hotel stuff, but I'm sure we'll run it back one day. And
Sure.
and yeah, and anyone have any questions, feel free to reach out anytime. So
Sujay, please drop your personal Instagram in the chat if that's okay. We have your Bloom Ventures, but if you could drop your personal in there, that'd be excellent. Y'all follow Sujay, and his socials on point. It's
exactly
fabulous.
And while Sujay does that, let's make sure, guys, remember, you always want to give something back to the speaker as well on the social platforms, right? So let's bring out those phones real quick here and take that picture. Right? Smile and take that picture, screenshot, or whatever it is. Once this is done here, go on your social channels and showcase Sujay here that he added some value, and I hope he did. I mean, considering the fires, right? Let's just take that was the case. At least it was for me. So with that being said, Sujay, thank you so much again. I'm excited to catch up here shortly again on a more personal note. And everybody, reach out to Sujay for any hotels you come across, right? This guy wants to buy 3 properties this year.
Yo, I appreciate you guys. Marcel, I was actually thinking about you earlier today. My layover was in Frankfurt, so I was home for you, man. It was a short layover, but we definitely got some good food at the airport. But thought about you there.
That's the biggest thing when you arrive there. Even on the airport food is good. It's not what you used to.
Airport is huge, man. It's crazy.
It's awesome. All right, awesome, everyone.
Guys. Thank you.
Thank you, Sujay.
Thanks, Sujay. Appreciate it.
Everybody else, we're going to conclude here in 1 minute. We're going to showcase you, obviously, who we are expecting here next week, guys, because we have another great. Change my slides. Boom. We are going to have another great celebrity guest speaker here. And you guys know him, I think. Most of us know him, actually. He's been absolutely crushing it recently here in the space, in the real estate space, in the mindset space, in the coaching space, in the cash flow space, in freaking every space. And he's a dear brother of mine. I know he's a dear brother to Trevor as well. So let me share here with you who we've got coming up. And it's our brother Keston Glasgow. So matter of fact, we haven't had him on here once yet, which is crazy, right? I feel like. So we're gonna make sure next week we're gonna, number one, talk a little bit about Keston's past, like a little bit where does he come from? We're gonna take 10-15 minutes to unpack that, because I feel like the last time he's done that's already a while ago, and everybody knows him now so well, and we're talking always about others, but not about him. and we want to know more about him, and then truly have him activate us, right? I mean, this is going to be a major activation Zoom. It's about mindset. We talk about mindset, how that translates into real estate. And I can tell you, this is going to be an awesome time, guys. Trevor, am I missing anything? Are you thrilled?
Oh, dude, I'm so pumped, man. I'll say better late than never having Keston on, but it should have been sooner, but I'm glad it's happening at least. That's the main thing.
Exactly. And I can tell you guys, Keston is where everything started for me, really, because I was one of his first clients on the personal coaching space, the performance coaching, and that's when I understood what I had to get in order to be able to take action and be on the path of success, really, right? That's how I met my brother Trevor, my brother Victor, my brother Peter. Man, honestly, that's how I met everybody at this point, because one thing leads to another. So with that, I think, Trevor, do we have our ecosystem here real quick to talk about? Here we go.
Yep. We always want to mention, right? Get plugged into the ecosystem, advance your multifamily journey, get activated, get propelled. Each segment builds on one another. Again, quick reminder, the financing Zoom, this is fresh off the press, right? It's at 8 p.m. Eastern now, not 7 p.m. Eastern. We'll make sure to have that updated in our communications this week. Get plugged in and let's continue our freedom chase together, y'all.
Let's chase freedom together, guys. I hope you have a great week. I hope you spent your Sunday night here with us well. You got value out of this. I know we sure did. And excited to keep crushing it, keep moving forward with you all together. If you need help with anything, please feel free to reach out to any of us or any of the leaders you can see here on the screen. But with that being said, happy Sunday night, guys, and start crushing it coming Monday morning. See you next Sunday. Peace out, guys.